Warren Buffett is deservedly recognized as one of the most successful investors of all time. However, even he admits that mistakes are inevitable, and he is no exception. In his legendary annual letters to Berkshire Hathaway shareholders, Buffett often discusses his biggest investment blunders. Here, I will talk about what I consider his 5 most significant mistakes. U.S. Airways. In 1989, Buffett bought preferred shares in U.S. Airways, attracted by the company's high revenue growth. However, this investment soon turned sour as the company failed to generate sufficient income to pay dividends. Despite this, Buffett managed to sell the shares at a profit, thanks to a surge of optimism in the industry. In his 2007 letter to shareholders, he noted that revenue growth often requires significant capital investments. Airlines are particularly vulnerable as they need additional fleets of aircraft to increase revenues. Such capital-intensive business models can become very vulnerable in the event of a business downturn, increasing the risk of bankruptcy. Buffett remarked, "Investors poured money into a bottomless pit, lured by revenue growth when they should have been cautious." Dexter Shoes. In 1993, Buffett bought the shoe company Dexter Shoes, expecting a long-term competitive advantage that soon vanished. According to him, it was his worst investment, leading to $3.5 billion in losses for shareholders. Companies can only be profitable if they have a sustainable competitive advantage. For example, Walmart has incredibly low prices, and Honda makes high-quality cars. These companies can maintain high margins as long as they offer products better than their competitors. However, high profits attract many competitors who gradually undermine the business and take away profits. Buffett noted, "A truly great company must have a deep moat protecting returns on invested capital." ConocoPhillips. In 2008, Buffett acquired a large stake in ConocoPhillips, hoping for high energy prices in the future. However, this turned out to be a bad investment as he bought the shares at too high a price, leading to multi-billion-dollar losses for Berkshire Hathaway. It's important to understand that even a great company may not be a great investment if paid for at too high a price. At the time, oil was over $100 per barrel, making oil company stocks excessively expensive and leaving little room for growth. An emotional approach to investing can lead to mistakes. A more rational investor might have considered the volatility of oil prices and the cyclical nature of the oil business. Buffett emphasized, "When investing, pessimism is your friend, euphoria the enemy." Google. Buffett candidly admitted that missing the opportunity to invest in Google was one of his major mistakes. This is especially relevant considering that he had a sort of insider information about Google's unique opportunities. Berkshire Hathaway already owned the insurance company Geico, which heavily relied on Google as an advertising tool to attract more customers. Nevertheless, Buffett passed up this opportunity. Missing out on Google was an error of omission. Buffett's technical knowledge was not his strong suit, and he admits that he did not spend enough time and effort analyzing Google's business and did not come to the logical conclusion to buy. Berkshire Hathaway. Buffett stated on CNBC in 2010 that Berkshire Hathaway was the dumbest stock I ever bought. He said it was a $200 billion mistake, regardless of how it ultimately turned out. Buffett originally planned to sell his shares in Berkshire Hathaway because the textile company was failing. Then something happened during the sale process that made him believe the deal on the table was unfair. Instead, he bought the company's shares and fired the existing owner. He initially planned to invest in the insurance business with the money he would have gotten from selling the shares. It took Buffett a significant amount of time to recoup his investment, much longer than if he had stuck to his original idea of buying an insurance business. As with ConocoPhillips, keep emotions out of buying or selling stocks. These $200 billion included the missed opportunity related to the insurance business. Nevertheless, Buffett missed another opportunity because his temperament got the better of him. Buffett noted that his holding company would be twice as large as it is now if he had invested in the insurance company. If you want to build your initial capital but feel you lack financial literacy and knowledge of investment strategies, I invite you to subscribe to my channel and write the word investments in the comments. I will send you a detailed investment guide and an effective strategy with 3 ways to invest your money to generate lifelong passive income. Money will really start accumulating in your accounts, and you'll see an increase. Try it out. Write investments in the comments, learn, and grow wealthy.